Picture every transaction you've ever made, etched into glass, floating in a house anyone can walk past and read. That's a public blockchain, and it's exactly why the biggest banks on Earth never moved in. So they built their own street, closed buildings, doors shut tight, one shared clock tower, keeping every deal in perfect time. And every month, more than $1 trillion crosses that street, on a blockchain most crypto investors have never even heard of. Today, we're walking down Wall Street's private street. Its ticker is CC. Welcome to What the Asset, where we break down everything you need to know about financial assets, from crypto and stocks to bonds and ETFs. We cover it all. If you like this kind of content, don't forget to subscribe to our channel. Let's start super simple. CC is Canton Coin, the native coin of the Canton Network, a blockchain built for banks and financial institutions by a New York company called Digital Asset. The network went fully live in the summer of 2024, and its coin only started trading in November 2025. The mission, in one sentence: let the world's biggest financial players trade with each other on a blockchain without showing the whole world their business. Because that is the problem with the classics. Bitcoin and Ethereum are glass houses. Every wallet, every transfer, every balance, visible to anyone forever. For you and me, that's transparency. For a bank moving billions for its clients, that's a deal breaker. Canton flips it. Every institution gets its own building on the street, with its own locked ledger inside. Privacy isn't a feature here, it's the foundation. So how do closed buildings do business with each other? Follow one deal across the street. A bank in Building A wants to swap cash for bonds with a fund in Building B. Neither wants outsiders peeking at the trade, so both watch the clock tower. One shared heartbeat the entire street can see. On the tick, both doors open at once. Cash leaves one door, bonds leave the other, and the swap settles in a single beat. Nobody else saw inside. Not the other banks, not the public, not even the street itself. But both sides know it happened, exactly on time, and it can never be undone. That clock tower has a name: the Global Synchronizer. And it's what turns 1,000 private ledgers into one working network. And this street already has famous doors. Goldman Sachs runs its digital assets platform here. HSBC settles bonds behind one of these doors. Nasdaq builds here. Tradeweb runs trading around the clock. And a firm called Broadridge sends more than $1 trillion a month down this street in overnight loans that banks make to each other. Think about that machine for a second. Every single night, banks lend each other mountains of cash against safe bonds, and every morning it all rolls back. That machine used to run on faxes, phone calls, and prayer. Now, a growing slice of it runs down this street. That is not a promise on a roadmap. That is traffic moving today. So where does the coin come in? Look down at the street itself. There's a toll meter. Every package that crosses the shared street pays a small toll. And here's the twist. That toll is paid by burning Canton Coin. Destroyed. Gone forever. Meanwhile, the clock tower mints fresh coins as rewards. For the builders who bring new apps, and for the operators who keep the street running. Burning on one side, minting on the other. A scale that ties the coin to real traffic. And the launch was just as unusual. No ICO, no pre-mine, not one coin set aside for venture capital. The very first coins only existed once the street did. In crypto, that's almost unheard of. The people behind it have been at this longer than most of crypto. Digital Asset was founded in New York in 2014. Before most people had even heard the word blockchain. Its first famous boss was Blythe Masters, the J.P. Morgan banker who invented the credit default swap. Today, it's run by co-founder Yuval Ruz, and the money keeps arriving. In June 2026, the company raised $355 million, led by the venture firm A16Z, with HSBC, BNP Paribas, and Citadel Securities writing checks. Even the plumbing of Wall Street leans in, DTCC and Euroclear, the two giants that quietly settle most of the world's stocks and bonds, companies so deep in the machinery that most investors have never heard their names, co-chair the network's foundation. When the plumbers pick a pipe, that tells you something. So how does Canton compare? Ethereum, the glass house, can host anything, but it hides nothing, and institutions mostly keep their distance. XRP has chased the banking story for a decade, mostly around payments moving from A to B. Canton's pitch is bigger and quieter at the same time. It doesn't want to be a coin that banks use. It wants to be the street their buildings stand on. And the tokens bringing real-world assets on-chain? On this street, those are tenants. Canton wants to be the landlord. The honest track record? Short. Canton Coin has only been trading since November the 2025, when it opened around 11 cents. It peaked near 19 cents in February the 2026, and today it sits around 10 cents. $10,000 at the opening would be worth about $9,000 today, after briefly touching $17,000 at the top. That is not a track record yet. That's a first lap, which brings us to the risks. And with this one, they are very specific. Risk 1, the bridges. A big share of that trillion-dollar traffic runs over private bridges between buildings, and bridges skip the toll. If the biggest flows never touch the shared street, they never burn the coin. Usage of the network is not the same as demand for the coin. Burn that into your memory, because it's true far beyond Canton. Risk 2, the supply. There is no maximum. New coins are minted forever, and critics point out that the earliest operators, the institutions themselves, were already minting for a full year before the public could buy a single coin. Risk 3, control. Which apps earn rewards here is decided by a committee. Crypto purists ask whether this is even a real blockchain. For the banks, that control is exactly the point. But you should know which side of that argument you're buying into. Risk 4, it's young. 9 months of trading, thin daily volume, and a price at roughly half its peak. As with any investment, only invest what you can afford to lose. So what's next? 3 things to watch. First, October 2026, when DTCC plans a broader rollout on Canton, Wall Street settlement giant, moving onto the street. Second, the tenant list. Every new institution is a new building, and the buildings have been arriving fast. And third, most important of all, watch the toll meter. The real test for Canton Coin is whether the big traffic moves onto the shared street, where every crossing burns coins or keeps rolling over the private bridges. If you want to own CC yourself, you'll find it on major exchanges like Bybit, Kraken, and OKX. The exchange we personally use to buy CC is linked in the description down below. So step back one last time and look at the skyline. On one side stands the glass house, open, radical, and still empty of banks. On the other, a street of closed doors and one shared clock, quietly moving trillions. Canton Coin is not a bet on crypto replacing Wall Street. It's a bet that Wall Street builds its own street, and that the toll on that street is worth collecting. If you found this helpful, give the video a like and subscribe to What the Asset for more clear, beginner-friendly deep dives. Thanks for watching, and see you in the next one.